Hello, this is Jordan, and this video is being recorded on Thursday, March 10th, 2022. Thank you so much for joining me today. If you're new to the channel, please subscribe. We have a lot of great content on gold, silver, precious metals, technicals, fundamentals, and a lot more content coming over the weeks ahead. Thank you. And in this brief video today, I'm going to discuss volatility indicators for gold and what that means for the next breakout. And so this is just one chart. We have a gold weekly chart here, and we have volatility indicators at the bottom of the chart. We have Bollinger Band width based on 40 weeks, 80 weeks. We have GVZ, which is essentially the VIX for gold. That only started in 2010. That is a contract that you can trade. And at the bottom, we have average true range. That's based on 14 weeks. That's the default setting on these charts. And so Bollinger Bands measure volatility, and usually when they constrict, that precedes an increase in volatility. So that precedes a sharp move in one direction or the other, which lends itself to increasing volatility. And so you can look at, you can look at 20 weeks, 40 weeks, 80, 100 weeks, whatever. But I like 40 and 80 weeks based on history and how they've looked over the previous decades for gold. So essentially, what you need to know is that big moves in any market, they require a period before that big move where volatility is coming down and it's declining, and that's what sets up a big move, because a big move means that there's going to be more volatility. You get an expansion in volatility after a big move. And so this is something I was talking about quite a bit in my premium service over the last 12, 15 months or so. I was mentioning the volatility indicators are coming down, but they haven't come down enough to the point where gold is ready to begin a big move. And what we see, if you look at these volatility indicators in the last 3, 4, 5 months, they've come down quite a bit. You look at the Bollinger Band width, the 40 weeks, 80 weeks, those are at really low levels compared to the last 25 years. Those, at least as of a few weeks ago, those are at some of the lowest levels over the last 25 years. So that is exactly the kind of volatility or lack thereof that we need to see that will precede a very big breakout move. I'm being presumptuous, presuming the breakout is going to be to the upside. GVZ came down, that came down pretty low. That has spiked up on the recent move. If we consolidate here for a couple months, that's going to come back some more. Average true range, that's for only 14 weeks. So over time, as the price goes higher, there's no way we're going to see that come all the way back to 20, 15. That would be just a dead market, especially at these price levels. For gold to trade at that kind of a range over a 14-week period compared to 10, 15, 20 years ago when the price was much lower. But so circling back, the main point here is the volatility indicators are now in place to facilitate gold making a big breakout move. Doesn't mean it's going to happen tomorrow or next week or next month, but the volatility is now in a position where it's telling us to be on alert for a big breakout move, which means an expansion in volatility. And historically, if you look at the light vertical lines going back to 2000, I drew them at points where volatility was pretty low and the market was getting ready for a big move. And it's true on the upside and the downside. We can see, volatility was really low at the beginning of 2018, and then gold broke down and had a correction there, although it broke down, but it didn't go down as much as I thought it would at the time. And then you can also see the end of 2012, early 2013. That was like a 18-month, 20-month range that gold broke to the downside of. And we can see early 2013, just look at where Bollinger Bandwidth was, look at where GVZ was. Those indicators were at a really, really low point, lending itself to a big move to come. So if you're looking at any market and you're wanting or hoping to see that a big move is possible, there's two things you have to look for. Number one, the market's extremely oversold. It's, at a major low, sentiment unwind, etc. That's when those big moves happen. But secondly, more importantly, in my view, for all of us, it's when the market is trading in a range for a really long time and the volatility indicators have come down to a low level relative to what has happened in the past. And again, that's exactly what we see in gold. I mean, super bullish cup and handle pattern. The handle, you could say it's still going, but that's 18, 19 months. And that has helped facilitate declining volatility. And so what we are likely to see in the months and quarters ahead is gold breaking out to the upside, trading much, much higher, and volatility is going to spike. It's going to increase quite a bit. And it's going to, it doesn't mean it's going to increase every week or every month, but volatility will increase as the gold market makes bigger moves. So I know I've already said it once or twice, but long story short, the volatility indicators, they are in place now for gold to make that big breakout move above 2,100. They weren't in place, 6, 9, 12 months ago. The market needed time to correct and consolidate that huge move. It needed time to build the handle. Volatility indicators are telling us it has built the handle. So at any point now in the coming weeks and months, look for gold to make that huge historic breakout above $2,100 an ounce. That's all. Thank you so much, guys. Let me know what you think in the comments. Follow all my work here at the channel or at TheDailyGold.com. If you haven't, consider subscribing to my newsletter. It's a great bargain, only $149 for 6 months. Find out what the best stocks are going to be, the ones you want to own for this coming move. You want to make 5x, 7x, 10x gains in this huge bull market. You don't want to just buy stocks that are only going to double and triple. At least that's my belief. And we do that in a smart way, limiting our risk, letting winners run, etc. That's enough for me. Thank you, guys. I'll see you in the next video.